Daily Market Commentary for Friday, the 27th of September 2019. Welcome to the last day of the week and some familiar themes of Brexit, trade negotiations, and now Trump impeachment inquiries. Late day news on Thursday, the trade negotiations with China would restart on October the 10th, so a positive tone for the last day of the week. Equities in Europe all moved higher, and dollar yen would rally from 107.70 up to a high of 108.18. The dollar showed early strength against both the euro and sterling, hitting highs against euro 109.05, sterling at 122.72. But buying against the yen would ultimately bring both back higher. The better risk sentiment also saw gains for Aussie, Kiwi, and Canada, while gold would lose much of its luster, starting as low as 1487 at one point. For crypto, it was another day of weakness to begin with Bitcoin slipping down to a low of 78.50 and Ethereum down to 161. The US day begins, and sentiment changes pretty quickly on one headline. Apparently, the White House was considering formally limiting investment in China. It's a headline that just kind of comes out. There's no real confirmation as to whether it's sure or not, but the Dow Jones having opened up, up over 100 points, drops from 115 down 25 very quickly. Dollar yen falls from 108.15 down to 107.85, and gold manages to bounce back to 14.98. As with all of these reports, when we just see a market headline, you have this sort of little bit of a stop for a second and think to yourself, is this real? Is there really a likelihood of such an action before, just 2 weeks or less than 2 weeks now before restarting trade negotiations? There's no official rebuttal of the story, but dollar yen pretty quickly jumps back up to 108.10 and the Dow back up to 60. Then a new headline, kind of on the back of the old headline, the White House deliberates block on all US investments to China, and back down we go. And to cut a long story short, the Dow Jones ends up finishing the day down 70 points, while dollar yen ends up holding around 107.90. Euro dollar bounces up to a high around 109.56, having taken some short-term stops off the order books, but settles back to close around 109.40. Sterling is unable to hold really above 123. The figure as some negative headlines emerge about Prime Minister Boris Johnson's relationship with an American businessman. Something for the gossip columns possibly, or maybe a little bit more substance. I'm sure we will find out this week. But this was enough for sterling to close around 122.90 on the day. Gold ended up at 1497.50. But even with the negative risk sentiment, it couldn't get it back above 1500, which I found a little bit surprising. And crypto ends the week a little bit of a rally. Bitcoin squeezing back over 8,000, and Ethereum back up to 169 at time of writing. And that leaves us with just one more day for the month to go, and then we are in to the final quarter of the year. So we should see what that brings. And this week, obviously, being a new week, we'll have the first Friday of the month. We'll have US non-farm payroll data on Friday. So it should be an interesting Friday, if nothing else. From a technical perspective, I just really wanted to touch base on euro dollar. I mean, euro against the US is the most traded currency pair out there. We know that. This is as liquid as any currency pair, or probably many financial instruments you're going to find. This week was probably a little bit frustrating from a technical standpoint. We had a double bottom at 109.27, which real strong double bottom at 109.27, which finally broke. And often when you get these sort of double bottoms, triple top type things, when they break, you get a real sharp move thereafter. We didn't get that this week. Euro traded down to 109.05. I think was the low in euro. So just 22 points through that level. and we had a close of the week at 109.40, which rather negated that break, and has us scratching ahead from a technical perspective. Whilst euro dollar is still very much in a well-defined down channel, and this channel here I've drawn going back to, I suppose, mid-November of last year, which is fairly well defined. You can obviously argue that euro's really been on its way down since early 2018, really. But it's failure here. It's also not only a failure when we broke through the double bottom to really get much of a momentum, but we also failed to break through the bottom of this channel, which really would have given us some momentum. So whilst we're obviously we've had a fairly muted bounce so far, and that's probably just some market getting a little bit over positioned, hoping for a further move down. It does frustrate a little bit. So I just wanted to bring back this daily chart again, which you have seen on occasion, just to highlight some of the bigger picture levels of support and resistance to the top side. Now we have, which I haven't drawn a line for, but we have some resistance now just above 111 with much stronger resistance, 111.62 and 112.5, and then to the downside, last week's low, obviously 109.05 will certainly be interim support, and then major support goes back to this line here I've drawn, 108.40, which goes all the way back to middle of May 2017, and obviously we have some other lines of support below there. So a little bit frustrating from a technical standpoint when you get moves like we had last week, but a lot going on in the world right now. So good to keep the major levels in the back of your mind. And with that, I hope everybody had a great weekend, and look forward to speaking with you during the week. Cheers.